All right, so we are actually gonna we're gonna get back to where we left off. Okay, so yeah, so once you have a Gartley pattern, meaning that your potential D point goes below your B point, or I'm sorry, once you have a Gartley pattern, that means that now everything changes. All of your points are now changed. So your A becomes your X, your B becomes your A, your C becomes your B, and now now this will become a C point. Your D will now become a C point, and then wherever the pattern would like to end will be where your D point is at, right? And so this will be where our D point, let's say the D point ended here. Immediately after the D point ends, we will be looking to expect a bullish push from here. So that means price will go up. So usually after the ending of a harmonic pattern, such as the Gartley, you'll have a direction which the market will go up or down. And then sometimes you may even have some type of price action at the D point to kind of tell you where price is going to end up at, you know what I'm saying? So, you always want to look out for that. Price action is very big, especially on these charts. And so, yeah, that's the difference really between your Gartley and your ABCD pattern. And I mean, it's pretty simple from there. Now, let's say we take out this retracement. This retracement tool. And we want to find out what would it look like, if you wanted to see where our take profits could be. You just bring out your retracement tool. Now it's different on a Gartley pattern. On the Gartley pattern, you just use, or an ABCD pattern for the same matter. You'll actually be using the extension tool on this leg right here. So after your swing high, swing low, you'll be using on that retracement leg, and you'll just go from the very top of that leg if it's a swing high. You go from the very top of the leg to the very bottom of the second leg here, and then back to the very top of that leg, and that should give you your levels to where you might expect price to go up to. So, actually, one second. I think I lied. 1 second. Okay, actually, guys, you want to actually do it this way, or matter of fact, let's make it simpler on ourselves. Let's make it easier. Actually, that would be upside. No, let's just go back to the extension. I think the extension actually will give you a better judgment because I just did the like I'm even getting a little confused, but let me. Okay, so bam, there we go, good to go. So bam, you'll use these levels to kind of see where your TP can be at, and to start this off, this is how you want to do it. I kind of had it backwards at first, but so with the Fibonacci extension tool, you want to start at the bottom of the second leg, or the bottom of the retracement, assuming that we're doing the swing high, and then go to the top of that leg, and then back to that level, and that'll give you your levels. And you can pretty much just look for any type of previous market struggling between any of these levels, and then kind of look to enter from there. But yeah, let's go back to the PowerPoint. Okay, so we're gonna talk about the Gartley pattern, right? You want to bear in mind that there are many different harmonic patterns that you can trade in the market. The Gartley pattern, as I mentioned before, I chose because that's my favorite pattern. I found, and just because it's my favorite doesn't mean it's gonna be your favorite as well. But it's just a pattern that I've grown to really like. During my trading years and actually trading year. Actually this month makes it marks the 1 year anniversary with these charts. So I consider myself pretty fortunate to still be in these markets because a lot of people quit at this point in time. But yeah, let's get back to this. So the Gartley pattern is my favorite. Notice that also one thing you want to notice that the Gartley and the ABCD pattern, they start pretty much the same way. The Gartley pattern is a pattern seen in the market that can be formulated with the use of fib retracement and or fib extension levels. It is a retracement tool and continuation pattern that occurs when the trend temporarily reverses direction before continuing on its original course. Also has a bullish and bearish version. Now the bullish version, after the pattern has completed a bullish trend, then occurs. So that's your bullish version. And then bearish version would be considered, when after the pattern has completed, a bearish trend has occurred. So those will be, ways of how you can kind of gauge whether or not you have a bullish or bearish version. Now you might ask yourself, how to identify harmonic patterns in the market, assuming we're talking about the Gartley pattern. Okay, so kind of referring to what I was talking about earlier. As I mentioned, the Gartley and the ABC pattern, they both start out the same way in that they both require price to retrace up around the 0.618 level, giving you a potential B point. But the difference is that Gartley has a point that doesn't pass a potential B point and it stops short, making the A point an X point, B point, and A point, so forth and so on. I just talked to you guys about that. Also know that the Gartley pattern has 3 order opportunities while the ABC pattern only has 2. Okay, so now just going back to this slide was actually duplicated. But just going back here, so you see this example here at the very top right, this image, and so we don't know yet whether or not this is our X or our A point or our A or our B point yet, because we need to wait for this third leg to finish either below or above this B point, this potential B point, right? So we don't know whether or not it's a Gartley or ABCD pattern yet. Okay, so right now you kind of ask yourself, is this an X or A point? Is this an A or B point? Or is this a B or C point? And right now, let's say price stopped here. Well, now this would be your C point, because that will make that an X, this an A, this a B, and this your C. Okay. Now, if price continue, you know what I'm saying, then that will make that your deep. That will make this your C point, because this will be your A, B, C, and D. So here we see that price stops short. In the second picture, price stops short of the potential B point. And now we change everything up. Now we know that this is the X, this is our A point, this is our B point, this is our C point. And then once our D point is finished, we'll then enter in for a sell. Also, let me talk to you guys about an alternate ABCD pattern, or the non-traditional ABCD pattern, which is usually seen when price stops short of the 0.618 level. Okay. All right, cool. So Cool. So let's say, you know, the textbook definition of or one of the main requirements or definitions of that's included in the definition of an ABCD pattern is that price has a retracement all the way up to the 0.618 level. But let's say price actually stopped short and it went, you know, it was, you know, the retracement was equal to the 0.5 or actually more than the 0.5, but before this area. So let's say price actually made a retracement let's say price made a retracement in this zone right here. And as you can see, or actually, I meant to say this zone right here. And as you can see, it didn't, you know, it didn't touch the 0.618 level or even pass it. And actually, yeah, let's say that price doesn't touch the 0.618 level and that it passes up the 0.5 level, actually stops at the 0.5 level. Now we're looking at a non-traditional or an alternate ABCD pattern, or, you know, now it's not an ABCD pattern, actually it's now called an AB equals CD pattern, right? And so now we have an alternate ABCD pattern, and we can, let me draw the, okay, so now price reverses short of the 0.618 level. So now we have a non-traditional or an alternate ABCD or AB equals CD pattern, right? And bam, we'll just pretty much, you know, go from there. But now the difference now with the ABCD pattern and the AB equals CD pattern is that with the AB equals CD pattern, prices stop short, okay? And that puts more risk on your stop loss. So let's say we had a regular ABCD pattern. So let's say price did stop short. It at least hit the 0.618 level. Let's say it at least hit the 0.618 level, right? And that we had a retracement at least hit the 0.618 level, and it hit this area right here. As I mentioned in the last class, it hit this area here, but a candle did not close above the, or actually, but in this case, below the 0.786 level. And so that will meet the requirement of a valid retracement for the ABCD pattern. And so price retraces here, right? And gives you your D. And what you can do, you can either enter here for aggressive C buy, or you can enter at this D once the ABCD pattern is completed and do a D sell, you know. So if you were to enter off the aggressive C buy, you will have to bear in mind that you really want your take profit to be right here, kind of where this your stop loss. So you don't want price to go all, you will have your stop loss barrier right here, because if price were to, you know, break out and go the opposite direction, this is where you would like to close the trade and stop your losses. So this is where your stop loss will be, and you know, it's about a 45 pip range, 45 to 50 pip range, and you know, that's ordeal for a trade, right? But let's say in a non-traditional, let's say in a non-traditional AB equals CD pattern, price stops short. So now your C point is a little bit higher from where you would usually have your stop loss, and that puts more risk and more stress on that trade, because now we have a longer way to go to hit your stop loss. The longer it goes, the longer ways you have to hit your stop loss, the more money you lose. So you want to keep that in mind, and most likely wouldn't enter off this C buy right here, and instead just go ahead for one entry. So just keep that in mind when trading the ABCD pattern or the AB equals CD pattern. You know, with the ABCD pattern, you can have 2 points of entry. You can enter aggressive C buy here, and then let the D and go for a D sell here. Now, if you would like to see, okay, where would my take profit be? So you have a retracement here at the, let's say, and this applies also to the AB equals CD pattern. But let's say price came right here. And you're like, wow, I wonder where this next leg is going to end at. Well, if it's an ABCD pattern, they call it ABCD pattern because the AB leg is the same size as the CD leg, right? And so if you want to know where this ABCD pattern was going to end, you just simply copy the same size of the AB leg and just add it to your C point. And that should be the exact level where, you know, you should be looking for a retracement. Now, bear in mind that, as I mentioned earlier, price will sometimes retrace earlier than that. And, you know, you just got to be on your heels when it comes to that. Sometimes price will retrace, you know, price will stop here, you know what I'm saying, or here, or here, or here. You know, you just got to be careful about that. It's not a for sure thing, but, you know, around that area is where you're expecting, you know, price to kind of revert from the D point. So just keep that in mind, you know what I'm saying, when you're trading the ABCD pattern. And I talked about that earlier, but just wanted to give you guys a more visual example of what to expect. So keep that in mind, guys. Let's go back to PowerPoint. So, oh, it took me all the way back to. All right, so back to this slide here. Actually, 47. So as I just talked about, the Gartley pattern, this is pretty much, you know, what we just talked about here. And so, you know, I'm asking here, what if the third leg extended past a potential B point, right? Well, you know, if it did, then that would give you an ABCD pattern, because, you know, that would violate the rule of what we know as a Gartley pattern. And so the whole all your points will change, the way you named it will all change. So keep that in mind. So as mentioned earlier, the trick now is to find a you know, the spot where you know, find a spot where, you know, you can do your take profit from the, you know, from your aggressive C buy. You know, you can do that really by finding the A point. You first want to locate your A point and then get the fib extension tool and extend it from the A point to the B point. You want to look for the 0.618 level, but before the 0.786 level, you know, it's the zone that you would expect for price, you know, to reverse off of. And so, you know what I'm saying, you're not really sure. Like, let's say you did an aggressive you made a trade off the second leg. So once that second leg was completed, you made a sell, right? And you're like, wow, I wonder where I should place my stop loss, you know what I'm saying, or my take profit. So one thing that I recommend, if you were to go into an aggressive, so let's say, let's go back here, guys. I know this is a very lengthy subject, but I feel like we got to talk about it, okay? We got to talk about this. Okay, cool. So let's say that, all right, right now we're looking at an ABCD pattern, right? So price gets you your swing high, and then it retraces, okay? And we're not sure, like, we know that now we have a perfect retrace, and we enter in for an aggressive C buy, but I would not recommend you to have your take profit all the way up here to the D point, because what if this ends up becoming a Gartley pattern, right? You know, and the Gartley pattern means that it stops short of this part and price will reverse. And now we don't have an ABCD pattern anymore. We have a Gartley pattern. So at that point where you make your aggressive C buy, you wanna have your take profit around here, because this is where if you would have a Gartley pattern, you know, you will have a reversal. This would probably be your TP1, your take profit one, where you will get out of the trade and take, you know, your profit. You know, and then if it went further, that would be your take profit too. So, you know, just keep that in mind. You know what I'm saying? Like, this isn't set in stone, but this will definitely guide you guys in making these trades. So that's kind of what this PowerPoint slide was talking about here. Now, you know, that's pretty much like how you want to look at that. And you can also, as I was saying here, you want to find your A point and then get the fib and extend it from the A point to the B point and look for the 0.618 level and before the 0.786 level to kind of get your, you know, your range. But here, I think I kind of had it backwards here, guys. It's actually the other way around. And so let me show you guys the chart. Let's go. And so let's say that right now you got your harmonic pattern, right? And let me kind of put this back here so I can see it. Okay, so let's just change all of this, make it a little easier. Let me erase all of this real quick. Actually, I'll just take off. Okay. All right, cool. And so how you want to do it, guys? How you want to actually, let's see. Actually, one second. Let me use this tool. Okay. Let's see. Actually, I'm hearing some background noise, so let me. Okay, cool. So we're good. All right, cool. So let's say that you were to enter into an aggressive B points sell, right? And you want to know, okay, where would I actually be looking for my retracement? Usually, your retracement will be around here, around this area. This is where you'll be expecting your, or actually around here. So it'll be like for sure after the 0.382 level, but a little bit before the 0.23 level, and in between the zone here. So this is kind of where you want to look for your retracement and then go from there, because if you enter on an aggressive entry here, this can also continue to go further and pass up this point, therefore giving you your ABCD pattern. But you know, you don't know that, you know what I'm saying? That's the trick. So you want to start your take profit analysis here, because you can be looking at a Gartley pattern. So just keep that in mind, guys, and you know, pay attention to that as well. Okay. All right. So what we're gonna do is, from now, we're gonna start our quiz. You guys, thank you guys for being able to sit through the lesson, and I know this was pretty painful, because this concept isn't an easy concept, but I know that, you know, in due time, as you guys, as we talk in the group chat and start to trade and stuff, all these things that I just mentioned will begin to make a lot of sense. So, you know, although it may be a little bit frustrating, you know, just keep in mind that, you know, as always is at the beginning, but we'll get there. We'll get there. All right, so you guys are just gonna put your answers in the box, but let's actually take a quick break. From now, I want you guys to take a little break. Let me actually take this down so you guys aren't Googling things, but we're gonna take a quick break and we're gonna resume the session real quick. I say like a 2 to 3 minute break. I need to get some water and then we'll go from there. All right, guys, and it'll be the same meeting ID. So we'll just take a break now and then we'll go from there. All right, guys.